is Power Trading Radio, live.
Welcome back to Power Trading Radio, everyone. Merlin Rothfeld. We were just kind of talking about general market stuff, going over what we think are moving out there in the donkey of the day on Anadarko. And as I promised you, there was a lot of interest last week for the options segment, and we've been really trying to get this young man on for a while. He's a very, very experienced options teacher and one of the more grounded people you guys will meet out there. So my special guest of the day is Joseph Kosik. One thing I like to do when I get everybody on the program for the first time is tell the listeners a little bit about your experience in trading, because we've all taken different paths to get to the point that we're at now. Some of us have gone through brokerage firms. Some of us have learned through trial and error. Some have gone through schools. What did it take for you to get from your beginning initial days, how did that start, to where you are now?
Well, basically, I started with the brokerage firm. My wife and I, we hired American Express financial advisor, and then when the market crashed in year 2000, probably everybody still remembers that, we figured that we are quite confidently certain that we know how to lose money. So we kind of didn't need American Express financial advisor to tell us how to lose money. And it was at that point that I embarked on this journey of learning how to trade. So William O'Neill and Investor Business Daily, that was my first stop, canceling method pretty much, combination of the fundamental and technical analysis.
What was it that really kind of honed you in on options? Because I know you're very big into options, and that's now your primary focus. But what was it that drew you to options? Well,
really, I mean, after the assistance that we got from American Express financial advisor, I must tell you that what was left in our account after that technology crash in year 2000 wasn't much. So I really wanted to use the leverage, and what better tool to use than an option instrument, right? It's all about that, because a lot of people say, like, oh, what is the secret of trading? Well, guess what? It sounds so simple. When I tell the people, they almost feel like I'm insulting their intelligence. It's not. It's a risk management. Simple as that. You got to have a target on every single trade that you place in. And more important than target, you need to have a stop.
Right. Because in my perspective, trading has nothing to do with making money. It actually has everything to do with losing money. And as you just pointed out, the discipline side of it, the risk management side of it, having a determined level, that is actually how you make it, is by not losing money. So as soon as you listeners out there forget about how much money you can make in this business and focus on how much money you can lose, then your trading will probably turn around and start moving up for the better. Am I out of line with that one, Joseph?
No, you're right along with the Warren Buffett is always saying. He has the two rules, and most of the people already are aware of it. Don't lose money, and rule number 2, remember the rule number 1. And I'm big on specifics of a language, or the precision of the language. One of my degrees in linguistics.
What we talked about was the retirement accounts, things like your IRAs, things like your 401ks, and how most of you believe that you can only go long in those. You can only buy something. Well, you can actually use other asset classes. And Joseph, what I wanted to talk briefly about was how we can use options in a retirement account, both to go long and to go short. And I know that you have some strategies that you like to use in those accounts. So tell us a little bit more about that.
Yes. The one strategy that I frequently utilize is actually cash secure put. So basically, what the short put actually means is that you have obligation, and you need to deliver on that obligation to purchase the stock. And you do get compensated for your willingness to own the stock by receiving the premium, right? Now, if the product goes higher than what the sold put is, then in that case you just keep the premium. Nobody's going to force you to buy something at the level when this thing is at a different level from what your agreement through that sold put is.
Right. In there, you talk about doing a, I believe it was actually buying a short vertical spread, or a bull put, and using 115 at the price as our current price. And if GLD is currently trading at 117, basically what you're saying was the cash secured put, you can tell everyone out there, look, I'm willing to buy it at 115, and you can pay me for my willingness to purchase it at 117 or 115. And unless it falls there, I'm just going to collect that premium. Is that right?
That's exactly what it is. And I don't know if I had a chance to send you a chart, but in case the listeners are a little bit confused and they're lacking the visual, to see this article is going to get published next, I believe, Tuesday or Wednesday, and it's going to have a chart and a whole explanation and 1,000-word essay on it. But so weeklies are the new options that were listed starting the June 4th on a handful of the exchange-traded funds.
This one that you've been talking about on GLD, you were just getting into kind of explaining the chart there, and I actually have it up on the screen here, which TJ can kind of keep up as you go through the discussion. So what I have on the screen, so that you know what they're looking at, Josip, is the daily of GLD, daily chart of GLD. So I think we were talking about it being at 115.
Yeah, that's right. So what I did, I looked at the technical analysis, and I saw that previously we came down to 115 and we bounced quite violently to the upside. So I was saying, okay, if it comes again to around 115 area, I'm willing to own it at that. And it was at that point that I sold this cash secure put in my IRA. Now, for each contract, I have obligation to purchase 100 shares, right?
Right.
So just be aware of the size of the trade that it's being placed when this is taking place, right? Now, because I have done this on the weekly, by Friday I will know whether I have these shares or not. And as you know, today the market has closed higher, so gold is currently at the 117.65, right?
Right.
End up owning the gold, but in case I did, I would have to purchase at 115, and I did receive the nice premium at the beginning of the week.
So the bottom line is you've already received money from someone out there who basically bought it from you. You sold the put, and if it dropped to 115, okay, you get to buy gold at GLD at 115. But if it doesn't hit it, let's say it rallies up to 200 tomorrow. We're at $2,000 for an ounce of gold. Still, it doesn't impact you at all. You collected your premium.
That's right, because that option is going to expire worthless, and it is true that most of options expire worthless, but the key question becomes in whose favor?
Right.
In the favor of the seller.
Yep.
So,
to what extent do candlesticks play a role in the charting that you do, the analysis that you do on your trades?
I mean, it's all about the technical. I mean, I shouldn't say it's all about the technical because you do have this third dimension, which is implied volatility, but that's beyond the scope that we have right now in the time that we have here. But the thing is, we're looking at the chart, which is two-dimensional product. It has a time, which is horizontal, and has a price, which is vertical.
Now, Josip, I have a question that came through from Mike, and Mike asks, stops are very important. I struggle with my stops versus the cushion with my out-of-the-money options and stock price. How do you recommend setting stops for out-of-the-money options? Ooh, tough one.
Well, that is a loaded question. I would probably have to break it in a few pieces. But again, let me just go back to the Steven Nissan and a candlestick. You see, the most important thing is that at any given time, be aware of it. What is the high and what is the low of the previous session? Mm-hmm. If the trader is aware of the high and the low of the